Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the weekend in July 22nd, 2022. Let's get into stocks. Stock prices increased over all major indices, with the S&P 500 rose 2.57%, the Russell 2000 increased 3.59%, and the Nasdaq gained 3.33%. Overseas international developed markets, which is the EFA, went up 4.43%, while the emerging markets gained 3%. In the U.S., the best performing sectors were consumer discretionary and industrials, and growth outperformed value. Now, in fixed income, bond values rose and interest rates fell, with the benchmark 10-year Treasury ending the week at 2.77, down 16 basis points. The 2-year Treasuries continue to trade higher at 2.95, which normally they're going to be lower, so it's showing the inverted yield curve. So commodities, and that's what we're talking about. What happens with an inverted yield curve? It's a sign of recession. Well, if we don't think we're in one right now, we're seeing it right now. We're starting to see things go down. We know everybody's like, oh no, we're not having a recession. Let's get our head out of the sand. We're not rosy like we used to be because of all the spending and everything else going on, and the market down 20 to 30%. So we are going to see more and more signs like this. FYI, just hold on for the ride. We will get through this, but we're still going to have a little bumpy ride. Talk about gas prices have fallen over the last month as drivers are using 8% less gas than they were a year ago. Well, yeah, because it was over $4 a gallon. Who wants to go places? Everybody's trying to conserve. While the U.S. price of a gallon has fallen from $5 on June 13th to $4.49 on July 18th. Average prices remain $1.34 per gallon higher than a year ago. Economic data: home builders monthly confidence index plunged 12 points to 55 in July, much larger than the 66 expected. It was for the second largest decline in the history of the index, having plunged from 80 1 year ago. Why? Well, because look at the mortgage rates, look at the cost of goods, look at the inflation. You can't keep going that high. It's got to stop. So all three segments of the index, current sales conditions, prospective buyers, and expected sales, dropped sharply. The greatest decline was in the western states. Also, 13% of builders in the survey reported reducing home prices in the past month to bolster sales and or limit cancellations. I'll give you a personal story real close. I was looking at a house for one of my daughters, and I called on it. The builder dropped the price literally 40 grand from what he wanted. And he said he talked to his accountant because they're starting to see what's going on. They can't keep this up. Even though materials are through the roof, they're starting to come down as well. So construction started on a new U.S. home, fell seasonally adjusted 2%, June to 1.56 million. That's the lowest rate since last September versus the consensus expectation for a slight increase. Now, the annual rate of total housing starts fell 6.3% from the previous year. Building permits for new homes fell 0.6%, slightly better than consensus estimate, and permits for single-family homes were down 8% in June, while permits for buildings with at least 5 units increased 13.1%. So looking at more housing for like apartments and such. So let's get into company news. Goldman Sachs, which is a contrarian and a core select holding, earnings well exceeded expectations as falling expenses helped to offset lower revenue. Growth in the recurring revenues for its consumer and wealth management groups were particularly strong, and the board also increased the dividend by 25%. Yield on the new rate is 3.09%. Now, Netflix, which is a G33 contrarian and a core select holding, reported earnings that were ahead of expectations. Also, a reversal in subscriptions appears to be underway as the last quarter decline was better than expected, and management guided for a return to growth in the current quarter. Shares rose 16.57 for the week. And how about Snap, which is a G33 and contrarian holding, reported disappointing results for the second quarter, and management withdrew its revenue and earnings guidance for the current quarter. Daily active users rose sharply year over year, but competition has intensified, with management noting that revenues were just flat in recent weeks versus a year earlier. So shares were down 27% for the week on that news, and the stock is now under review. That includes it. That's it. That concludes this week's market update. Thank you so much for being part of our ARA family. Please give us a call if you have any questions, 855-756-5700, or visit us on our site at aradvisorsinc.com. Don't forget to visit our Facebook and YouTube pages, and if you're not getting our newsletter, let us know. Thank you as well, everyone, for all your prayers and thoughts for a little tragedy in our family recently. So I've been in and out of the office a lot. So thank you so much, and God bless you. Anything you need, just reach out. We'll talk to you soon.